Last week, Britain got a new Prime Minister and a new Chancellor. That's the person in charge of the country's money. And within hours, before either of them had actually done anything, the financial market had already reacted. The reaction is going to land in your mortgage, your energy bill, and your payslip. So let's go through it properly. This was the month Britain got a new Prime Minister and a new person in charge of the money, both in one day. And the markets got nervous before either of them had even made a decision. On Monday, the 20th of July, Keir Starmer stepped down as Prime Minister. Andy Burnham, who used to run Manchester as its mayor, took over. He is the 7th Prime Minister in 10 years. Let us sit for a second. That's a lot of changing of the guard. Here's the bit that actually matters for me and you. On his very first day, Burnham talked about the government spending rules. Basically, he limits the government set itself on how much it's allowed to borrow. He said he stick to those limits, but will push them as far as he could. That one comment made investors nervous. Now think of the UK government like someone applying for a huge loan. The people who lend it money, big investors, want to know it will be paid back surely. If they get nervous that the government might borrow more than expected, they don't refuse to lend, they just charge more interest for the risk. That's exactly what happened. The cost of the government's borrowing money went up within hours and the pound dropped the values too. Quick one, I'd appreciate if you could drop a quick follow, like and subscribe. Let's keep growing. Why should you even care about this? Because when it get more expensive for the government to borrow, it usually get more expensive for you to borrow too, especially for mortgage. Bank price mortgages partly of how expensive government borrowing is. So a comment made in a speech in London can genuinely nudge your mortgage quote a few weeks later. Britain already borrow more expensively than any other major economy right now, and moments like this are a big part of why. Later that same day, Burnham picked John Healey, who used to be in charge of defense, as the new person running the money. That calmed things down a bit. The pound crawl back some of what he lost. There is early talks of cutting a tax on energy bill and of letting people earn more before they start paying income tax at all. Nothing is confirmed, but we'll find out much really in October when the government set out its full plan for tax and spending, something called budget. And honestly, my take is this: the size of the reaction to one sentence tells you something. Government today don't have as much room to just spend their way out of a problem as they used to. Whoever is in charge, that's not changing anytime soon. Back to the numbers. Inflation is simply how much more expensive things are getting compared to a year ago. Came in at 2.6% in June, down from 2.8% in May, and a bit better than the 2.7% most economists expected. Cost is still 2.6%. Cheaper fuel did most of the work here. Diesel and petrol got more noticeably cheaper over the month. But here is a specific type of inflation. The price of things like haircuts, restaurants, and repair, rather than goods on shelf, that barely moved, easing only slightly to 3.6%. The Bank of England watches that one closest because they tend to reflect how much things cost to actually run a business here in the UK, wages and rent for the shop, rather than the price of oil abroad. That's the number keeping them cautious, even with the good headline news. And now it's one more thing the new person in charge of money has to deal with on day one. On interest rates, Bank of England sets a rate that affects how expensive borrowing is across the whole country. Mortgages, loans, credit card, all of it. That rate stayed the same in June at 3.75%. Next decision land on the 30th of July, just 10 days into the new government. And honestly, it could genuinely go either ways this time. You can already see the effects on mortgages. The average 2-year fixed deal, meaning your rate is locked in for 2 years, went up around 5.48% in the middle of July, after weeks of actually getting cheaper. The price of food in supermarkets went up in June for the first time in over a year, rising 2.6%. I know, right? Fish led the way up 11% compared to a year ago, partly because shipping has been disrupted by the conflict in the Middle East. Chocolates, energy drinks, and fresh fruit also went up faster than average. Energy bills are the bigger jump. The regulator that sets the maximum price energy company can charge, called Ofgem, raised that limit by 30% on the 1st of July. For a typical household, that takes the yearly bill to around £1,663. That's an extra £18 or so a month. And it's happening because gas is more expensive to buy on the world market right now. Again, tied to that same conflict. It still went below the £2,500 back in 2022, but it's a real jump in just 3 months. House prices are actually holding up better than the mortgage news suggests. The average UK home is now worth around £277,000, up 2.2% over the past year, but with mortgages getting more expensive again because of the political uncertainty, don't expect it to get any easier to actually borrow the money to buy one. Regular pay went up 3.4% over the past year. People working in public sector, the NHS, schools, government job actually saw bigger pay rise than people in private company this time around. Here's the part that's been looked over because it's a bit awkward to say out loud. If your pay rise was smaller than inflation, didn't really get a pay rise at all. Your money buy less than it did last year. It's a pay cut wearing a nicer word. One confirmed change worth knowing: from July, tax break on top-up payment for Mobility car scheme, which helps disabled people lease a vehicle, has been removed from new leases. So a 20% tax now applied to any extra amount someone pays to upgrade their car through that scheme. What to watch out for the coming months? On the 30th of July, the Bank of England decide whether to change interest rates just 10 days into the new government. Genuinely uncertain either ways. Over the next few weeks, watch what the new person who running the money actually does before the full October plan lands. If this actually help you make sense of a pretty mad month, that's generally what this is for. And hitting subscribe means more people going through exactly the same thing get to see it too.